is India's #1 news network, and you're watching News 9. English news as it should be.
A very good morning. You are watching News 9. I'm Karthik Malhotra, and well, the final countdown has begun. Just a few hours to go before what Trump is calling the Liberation Day, April 2nd, and the tariff plans likely to kick in. Remember, 2 a.m. or rather 2 p.m. Washington time is when Trump will make the final announcement on tariffs. So on the show today, we discuss as global markets and global economies await Trump's final decision on tariffs. It's keeping India on the edge. What this could mean for India, we'll discuss that on Morning Brief at 9. Morning Brief at 9. Let's look at the headlines making news on 2nd April, what is called the Liberation Day as per Donald Trump. Well, Liberation Day, April 2nd, that's the day for tariffs to kick in. Global markets and economies around the world await reciprocal tariffs likely to kick in today. And in anticipation of tariffs, US markets edged higher after Monday's meltdown. What would be India's stock market mood? We'll get you on the show. Meanwhile, Commerce and Industry Minister Piyush Goyal says India's tariff policy aims to regulate trade, protect domestic industry, and rake in taxes as revenue. As the year ended, electric two-wheelers and electric three-wheelers race ahead with as many as 13 lakh units sold in FY25. But a mixed mood when it comes to four-wheelers and passenger vehicles in India. Maruti Suzuki and Hyundai Motor India see a dip in dispatches in the month of March, while Tata Motors and Mahindra lead with growth in SUV sales. And India has touched another new record. UPI transactions as high as 24.7 lakh transactions recorded in the month of March 2025. And it's not just the UPI. India has the 4th largest foreign exchange reserve, says Finance Minister Nirmala Sitharaman. She says India is good for the next 11 months. Meanwhile, artificial intelligence is eating away jobs. Zomato lays off 600 staffers on its customer support unit. And staying with the quick commerce space, Swiggy has been delivered a 158 crore rupee tax notice. Swiggy says it will appeal it. Let's look at the top story that we're tracking for you this morning on April 2nd, which has been marked by US President Donald Trump as Liberation Day. And that day is here and now. And with it, a wave of new retaliatory tariffs that could shake up global trade. The US President has threatened extensive duties on countries he claimed have treated American workers unfairly, with reports suggesting a 20% tariff on most imports worth as high as $3 trillion annually. While the White House insists details are still speculation, experts warn the move could increase inflation and cost US households thousands. With tensions rising and trading partners preparing to retaliate, all eyes are what Trump's unveils next.
April 2nd, reciprocal tariffs kick in.
U.S. President Donald Trump has been calling April 2nd Liberation Day for weeks. It's the day he'll be unveiling an array of new tariffs that could upend the global trade system. Here's what to expect. Trump has threatened tariffs on all countries who, he says, have disadvantaged American goods and workers.
Many countries have taken advantage of us, the likes of which nobody even thought was possible for many, many decades, And, that has to stop.
White House aides have drafted plans for tariffs of about 20% on most of the $3 trillion of goods imported annually to the U.S. That's according to the Washington Post, which says no final decision has been made. The report also said trillions of dollars made from new import revenue might be used for a dividend or refund to American taxpayers. A White House aide said any report ahead of tomorrow's event is mere speculation. Trump has already imposed tariffs on aluminum, steel, and autos, along with increased tariffs on all goods from China. That's raised tensions with America's largest trading partners and vows of retaliation. Trump argues that American workers and manufacturers have been hurt by free trade deals, which lowered barriers to global commerce. But economists warn that his tariffs will raise prices at home and abroad and hammer the global economy. A 20% tariff on top of the ones already imposed will cost the average U.S. household at least $3,400, according to the Yale University Budget Lab.
And inflation aside, even as Donald Trump said yesterday that India is likely to reduce tariffs, there is absolutely no official word from the Commerce Ministry. Rather, Commerce and Industry Minister Piyush Goyal has said that India's tariff policy aims to regulate trade, protect domestic industries and generate revenue through taxes on imported and exported goods. In a written reply to the Lok Sabha, he said, while the changing trade scenario, India is moving towards having free trade agreements wherein customs tariffs and non-tariff barriers are reduced or eliminated on substantial trade. Now, India's tariff policy aims to regulate trade, protect domestic industries and generate revenue through taxes on imported and exported goods, is what Minister Piyush Goyal said. He added that lowering tariffs, especially on inputs and immediate goods and intermediate goods, helps enhance competitiveness of Indian manufacturers. Now, in a separate reply on India-US trade, Minister of State for Commerce and Industry Jitin Prasada said that the government of India continues to engage with the government of United States to achieve enhancement of as well as broadening of bilateral trade ties in a mutually beneficial and fair manner. He also said that industry is being encouraged to identify new opportunities arising out of impact on tariffs on the existing supply chains. Parallelly, imports are being monitored for safeguard measures under World Trade Organization rules, and if increased imports, including from Mexico, China and Canada, cause or threaten serious injury to domestic industry. Well, this is what we are getting from the Commerce Ministry. But what really does this entire Liberation Day and the likelihood of tariffs kicking in mean for India and the Indian economy? Joining us this morning are two very special guests. We've got market expert, co-founder and CEO of Moneyfront, Mohit Gang, as well as founder and chief economist of Nikore Associates, Mithali Nikore, joining me this morning. Good morning, Mithali. Morning, Mohit. Mithali, let me begin with asking you, what is India's real concern here? Trade of about $190 billion with US get hit with high tariffs by the US, or the trade surplus that likely goes into deficit if India goes ahead and lowers tariffs, as Donald Trump is suggesting India would do?
So I think, Karthik, there are three major issues, that need to be worked out. First of all, I want to commend the Prime Minister, because when the Prime Minister was actually in Washington last month, he managed to work out a path for India and the US to go forward. And that path culminates in a target of $500 billion of trade by 2030 between the two countries. So I think that is our North Star, which the Prime Minister and the President Trump have set. And that, sets the tone for the, discussions that happen from there on. So I think that is a very positive development. Now, what are the concerns? Number one, the concern is agriculture. So at this point in time, one of the major sectors on which there are high tariffs imposed by India on US products is agriculture, and the US is looking to export commodities like cornstarch and cornstarch oil, which it produces in very high quantities, to India, right? So that is the first concern. And the second concern for India is IT exports, right? We know that the IT sector and the IT industry, even today, 75% of our exports are to US or US based companies. And therefore, it's very important for us that none of this discussion of tariffs, which is happening on the merchandise trade side, which is happening on the goods trade side, which is affecting more of the agriculture sector, should spill into the IT sector in any way or form. So at one side, we have to protect our farmers and we have to protect our agriculture sector, which is obviously not as mechanized as the US. But on the other side, we also have to protect our IT industry.
Absolutely. No doubt about that. And I think while the IT industry may not directly be impacted by tariffs, Mohit, the view is that the IT sector would be indirectly impacted with tariffs. So, and that seems to be something which is spooking Indian markets right now, that as inflation edges higher in the US in the wake of these tariffs, the demand for India's not just manufacturing and manufactured goods, but even the IT services is likely to get hit and reduced significantly. So what are you really making of the coming months and the coming years if Trump does go ahead and impose tariffs?
Sure. Morning, Karthik. So look, I think honestly, no one knows the exact extent and magnitude of what is going to unfold tonight, right? So at 1:30, perhaps we have a long night ahead. We'll come to know what exactly and which countries are getting hit to what extent. But it's pretty clear that today we will have some announcements which will kind of impact the global trade balance or the global economy, so to say, right? How much will it impact Indian IT is a very, very far call in distant future, honestly, to right now come to any assessment. My sense is, as rightly mentioned, the merchandise export is something which will definitely get impacted. To what extent we can't fathom right now. However, IT services might get impact because of the immigration laws and the stringent visa clauses around the H-1B part, which is what the IT industry is trying to grapple with. So if India doesn't cooperate to an extent with US, which US wants India to be cooperating, right? That's where you see the impact coming in, where perhaps US might impose further restrictions and curbs on the H-1B visa, which is the biggest source of IT companies' manpower residing in US, right? So I think that is one big aspect, other than what we are seeing around the developments in the AI world and other things, which perhaps might impact the manpower scenario per se for the entire industry, not just for India, but for the entire industry. So I think from an IT perspective, these are the only two challenges which I foresee. But I think the bigger impact will be on merchandise goods, which I think will only come to know tomorrow morning.
Right, we will get to know tomorrow morning, but Mithali, let me bring you back into this conversation. And the fact is that even though Prime Minister Modi and Donald Trump sort of had their bear hugs and handshakes, and there was what many refer to as a vision laid out for the trade to increase to $500 billion, which you also mentioned just a few minutes back, the point is that there's got to be a road map for that. So will that roadmap, or should that roadmap, just speaking pure economics, entail India reducing tariffs beyond just bourbon whiskey? I mean, wouldn't it be nice for us here in India to get access to, let's say, cheaper craft cheese and tuna cans and even cheaper Harley Davidsons for India's own consumption story to sort of kick in? So is there a real case economically for India to cut tariffs?
So I would answer that in two parts. One is, let's look at the non-agriculture merchandise goods and let's look at the agriculture sector merchandise goods. So when you talk about, for example, automobile sector, or we talk about, for example, electric vehicles, or we talk about, as you said, Harley Davidsons, sure, there we can go ahead and think about cutting down custom duties and tariffs. But at the same time, remember, goods which are consumed by the richest sections of the population and is a way for a poor country. I mean, we should still remember that we may be the fastest growing economy in the world, but we're still much, much lower than the US when it comes to per capita income. So in a way, as an emerging economy, as an economy with high amount of income inequality, this gives us very essential revenue which comes from the higher income segment. So yes, to some extent, that's the trade-off that, we would have to make. But if we do have to make that trade-off, it is still worth it, because at the end of the day, protecting the agriculture sector and protecting the farmers is at this point in time, in my view, the number one priority of the government of India, which they have made it clear as well that they are not going to stop protecting the farmers. And they have never, regardless of administration, the government of India has never given up the interests of the farmers, because the farm sector in India at this point in time, we have our domestic issues, but it is the stack is completely laid against us.
Sure.
We have the worst impacts of global warming and climate change that our farmers are currently bearing. We have limited amount of investment and resources that we can make to mechanize agriculture, and we have a situation where we are producing goods like wheat and rice, which are feeding the entire world. So frankly, if the US, goes ahead and imposes these reciprocal tariffs, it is still them who are, and American consumers who are going to have to pay higher for, the wheat and rice that we export. And also, we are not a country which consumes a large amount of corn and cornstarch. So again, if we reduce the tariffs there, then there will be a huge amount of corn and cornstarch dumping, which, we risk coming into India, with farmers who are heavily subsidized in the US by the US government to produce corn and cornstarch. So,
Right.
At the end of the day, we have to protect our farmers.
Sure, but I mean, when you talk about corn and corn, a primary ingredient that goes, let's say, into Mexican food, India also has the option then to import corn from Mexico. We can, on paper, lower tariffs, but not go ahead and still sign deals with American producers. But Mohit, let me bring you into this conversation, and we are talking about agri, and agri sector is something that India has been ferociously protecting. I remember even early 2000s, if you remember, when late Arun Jaitley was finance minister, in fact, even trade and commerce minister, if I'm not mistaken, at WTO conferences way back in Cancun, India's agri sector had been the bone of contention, and India had ferociously defended India's agri sector. But apart from the agri sector, we also have India's auto industry, India's pharma industry, which likely stand threatened with imposition of tariffs by the US. Now, my question is, does the US have other equally competent trading partners who can offset these India imports if India does not lower tariffs? I mean, for the US as well, there is going to be some sort of a lock-in when it comes to countries that it needs to procure components from. Specifically, auto, pharma is what I'm talking about, Mohit.
Got it. Look, I think honestly, India will relax some of these duties, Karthik. My sense is we should perhaps, and taking a cue from what Mitali was saying, we should not be so steadfast about few give and takes on this relationship. I think it's a relationship where we have laid out a path of over $500 billion of trade relationship. So I think we have to just lowering on a Harley Davidson or lowering on some, let's say, a Tesla entering Indian markets. And I don't think so this is going to impact the Indian market. Is going to impact certain companies at a very high level, certain consumers which are in the premium side. But overall, I don't think so. This is going to impact too much. Does US have another options globally? Yes, US will have another options globally, and so will India, right? So as you rightly said, India can
options. I mean, Mohit, sorry to cut you off, but what are the options US has? It has imposed tariffs on Mexico. It has imposed tariffs on China. It has imposed tariffs on Canada. The entire European Union is likely to be hit with tariffs. Now India comes next. So US is also technically running out of options, right? If you slap universal tariffs across the world, you still got to fend for yourself and import from somewhere to feed your population, and I think India is fairly well positioned to service that need of the US.
Exactly.
Look, I think it will then become a case of which global country or which country is more desperate to kind of boost its state. So let's say, assume US were to raise tariffs on Indian pharma, and pharma specifically because you mentioned that. Right now, US will need certain capabilities to import pharma products from India. Now, the who are importing in US, they will have two options: either to raise their prices and deliver it to the US consumers then, because US is imposing tariff, which means the goods are getting costlier out there, or they would have an option to ask India to share some part of that burden, which is the increased cost in the US market, which means the Indian exporters out here kind of reduce their margins or kind of share some portion of the burden. How this entire thing will get balanced is anyone's guess. Look, honestly, it's very difficult to call out which side will fumble first. But my sense is it will be a give and take at both ends. and perhaps the relationship will continue to go. And I'm sure US is not so naive as to on some things which are very, very essential to their markets, let's say a pharma per se, right, or even IT services for that matter. I'm pretty sure they're not going to let it so loose, or they're not going to raise the tariffs to a certain extent which becomes unaffordable for their own population and kind of raises the inflation fear, which any which ways is becoming a sole concern in the overall economy out there, that inflation might just peak up and it will kind of lead the US economy to a stagflation kind of scenario.
Absolutely.
So my sense is, I think
if US enters stagflation, it is pretty much bad news for the rest of the world, including India, because then Indian markets and investments into India all take a beating. But Mithali, if I can bring you in, when Trump was sworn in the month of January, the initial conversations we had here, right in this studio, on this channel, there was still this little bit of doubt on whether Trump is actually going to complete his swing, follow through with these tariffs, or just use it as a threat or as a negotiation tool. Now, given this whole messaging around Liberation Day, again, speaking statistically, which is part of economics, how high are the probability chances for Trump to go ahead and see these tariffs through?
So I'll actually give you a football reference, which I think, I know nothing about football, but I just know this one term, which is called self-goal.
All right.
I feel at this point in time, what President Trump is doing a few self-goals, because honestly, when Mohit was saying, I'm sure that the US administration is not going to let, pharma prices and, medicine prices go above a certain amount. Honestly, can any of us really predict what he's going to do? And at this point in time, very honestly, when I'm speaking to a lot of economists who are based in the US as well, and we have been discussing, there are a lot of people who are putting the probability of generalized inflation crossing 5% in the US economy, which has not happened in the last, decade, at a, possibility of over 30%. So, there's a number of economists basically across the US who are saying that the US is now staring at a scenario where there could be generalized inflation. And I think, Karthik, coming to your question of what are the options, to be very honest, I am foreseeing a scenario, and I think a lot of economists, trade economists are actually talking about this, where we could see a complete re-engineering of supply chains, where several large companies, for example, re-engineer their supply chains to supply to the rest of the world, where there's a certain rules-based trading order, and to supply to US markets. And there might be, how the US might benefit is through onshoring. A lot of auto companies, for example, might say, the US market is large enough for me to go ahead and invest in Detroit. And just, onshore. Same with the pharma sector, because these are sectors which are essential. But this will take time. And in the short term, if the tariffs continue the way they are, some amount of that self-goal, which I spoke about, is going to hit the American consumers.
All right. I want to stay with that analogy of football and self-goal, Mithali, that you introduced us to, and take this question to Mohit. Mohit, does it seem that Donald Trump is willing to take a few self-goals right now to and perhaps lose a few interim matches, inflation being one of them, stagflation being another one, but eventually coming victorious out of this tournament in the race to remain the sole global superpower in the world, considering especially what US is trying to do now with secondary tariffs on countries that import Russian oil? This is going to not just hit Russia, it's also going to hit China, it'll definitely hit India as well. So how do you see this whole strategy of the businessman Donald Trump playing out?
Look, Karthik, I think in economics is always a very fine balancing of few things. Honestly, if because of these measures, let's say US is able to export more, right, which is what the Trump administration is trying to do, basically trying and asking the other countries to reduce the import barriers so that the US can be a larger exporter in their scheme of things. My sense is, even if they move from X percentage to a certain percentage, it will always be an increase in the US exports, right? Which will kind of help the dollar, which will kind of help the US economy. The inflation scenario in US, I think honestly that the markets have been predicting for a fairly long while, because if you see the US 10-year yield, there's been almost 75 bips of rate reduction in US last calendar year. But the yields have not eased off. From a high of almost 4.75, they came down to 3.75. They're still hovering around 4.2, 4.5 level, which means that the market is already pricing in is a lot of inflation out there in the US, and that's the reason the yields have not been easing off. My sense is we will have to wait and watch for next 6 months to figure out as to how much impact it is having on the US exports. Are they able to significantly increase exports by asking other countries to lower the tariffs? If they're able to do that, then perhaps a larger goal of Trump administration will have been achieved. Impact is higher on the domestic side, which means that the inflation is shooting up and they're not able to export as much, then I think perhaps the US economy goes into a tailspin. And I think it's very difficult to call out which side the coin will flip right now. My sense is we got to wait for another 6 months to figure out what actually happens in this saga.
Right, so 6 months is what we'll wait for. Mitali, thank you so much for joining us today, this morning. Mohit, do stay back for just a minute or two. Let's quickly get a mood check of where markets are opening this morning. It's been just about 10 minutes or so since the markets opened, and it seems that we are off to some sort of a green start this morning. Nifty and Sensex are both up marginally. One would perhaps call it a gap up opening today, especially after the kind of crash that we saw on the main frontline indices yesterday. The story for the small cap seems to be a little darker today. Nifty small cap 100 is down about 0.4% or so, but Sensex and Nifty holding up fairly okay for the first 5 minutes of trading this morning. Well, we never know how things are going to pan out from here. Remember what happened yesterday. Markets opened marginally higher, and then the kind of crash that we saw has wiped out some, estimating as much as about 3 lakh crore rupees or so of investor wealth. Let's quickly also look at the Nifty 50 heat map and try and make sense of which are the sectors which are in action today. Well, it seems that the IT sector, barring Infosys, which is up about 1.1% this morning after it lost about 3% yesterday, is the only exception in the IT pack, with HCL Tech down about 0.7% or so. Even the auto sector, Maruti Suzuki is up about 1.18 despite the auto sales data which came yesterday, which suggested that that it has actually not been able to live up to its momentum for the month of March, when on a year-on-year basis it saw almost a 1% decline. Tata Motors is down about 1.18%. Remember, Tata Motors owns Jaguar Land Rover, and US happens to be one of its key markets. And this is pretty much the scene today. Reliance is down about 0.5 percentage point. Energy stocks perhaps reeling under pressure with secondary tariffs that may kick in if Donald Trump goes ahead and sees through what he started off by saying is his Liberation Day and the US's Liberation Day. Mohit, what are you making of the sectors and stocks in action today and the mood of the market?
Yeah, Karthik, look, I think clearly the screen is indicating a shift towards the large cap safety for the day, right? I think as you see, the mid and smalls are a little down, and the money is finding safe cocoon right now before the big measures tonight are announced. And I think it's for the day today. I think it might just be an easy day for traders. They should just sit it out. Right. My sense is without taking a directional call, because you never know which way the wind will blow. But perhaps there will definitely be tariffs coming in. Right? To what extent, what magnitude, and on which country, how much is the only thing which we don't know as yet. But they would definitely be. I don't think so. After so much of hullabaloo around it, the administration will not announce tariffs tonight. So they will definitely. They have a larger press conference as Rose Garden today, and the entire Trump cabinet is going to be there. So definitely tariffs are coming in, and that's the reason why we will see a slow day of trading today. My sense is very difficult to take directional calls today, and perhaps large caps and finding cocoon out there is the only best solution.
All right, Mohit. And if tariffs kick in today, do you think we can price in the fact that if the Liberation Day, the retaliatory tariffs kick in or reciprocal tariffs kick in today, then the auto tariffs will definitely kick in tomorrow, and subsequently we cannot rule out the secondary tariffs on Russian oil importers also kicking in?
Possibly, yes. Look, I think my sense is they will go through the entire drill once and perhaps then roll back or then reduce the impact or severity of it. But my sense is because they've announced it at such a large scale to the entire world with so much of fanfare, my sense is US will go ahead and implement all these measures unless the economies blink first, which means unless India kind of comes out with a package and kind of reduces the tariffs on some US goods, or maybe does an MFN status with US and kind of cuts out a separate trade deal. You never know. But yeah, unless something dramatic happens, my sense is these things are likely to come.
All right, Mohit. Well, let us leave it at that this morning. Of course, we will be tracking the Trump tariffs, the Liberation Day, and the impact on the Indian economy, Indian markets, and all the statements that are likely to come in through the day and perhaps through the week right here on News 9. Meanwhile, a little bit of correction on the Nifty 50. It started about 0.2% up. It's down by about 10 basis points in early trade this morning. Sensex holding up comfortably above the 76,000 levels, Nifty 50 above the 23,000 levels. With that, we will slip into a short break right here on News 9, but more stories coming up for you. On the other side, you are watching Morning Brief at 9 right here on News 9.
What does it take to be the greatest in the world? There is one thing which truly sets you apart, your inner strength. Sodium D&D Rebar, true inner strength.
Every brand tells a story. And they are the storytellers, the Sutradhars. They present a brand with band, baja and barat to you. They are the Brandwalas.
Light, camera and action. Kick back, relax, grab your favorite snack because News 9 is here with your weekend dose of entertainment. It's time to take a deeper dive into the buzzworthy happenings of the entertainment world. From celebrity gossips to exclusive conversations, from nostalgic moments to News 9's Pick of the Week. Don't worry, we've got you covered here. And I hope you've grabbed your popcorn by now because News 9's page 3 is here to serve you everything that we call entertainment. So do stay tuned every Saturday and Sunday, 2:30 p.m.
Back, you are watching Morning Brief at 9. Let's shift focus to some of the domestic stories that we are tracking for you this morning, away from the tariff narrative that has been going on. Well, let's begin with what's happening in Motown. Well, the wheels, Maruti Suzuki and Hyundai Motor India both reported a year-on-year decline in vehicle dispatches to dealers in the month of March. They state this comes amid inventory correction and softening demand. But that's not the story when it comes to the SUV makers, because both Mahindra and Mahindra as well as Tata Motors, on the other hand, reported an increase in domestic passenger vehicle dispatches to dealers on the back of demand for their SUV models. Well, let's begin first with Maruti Suzuki and its numbers. Maruti Suzuki India, which is the country's largest car maker, said its total domestic passenger vehicle dispatches to dealers declined by as much as 1% to 1,50,743 units as compared with 1,52,718 units in the year-ago month of March. Well, move to Hyundai Motors now. Hyundai Motor India said its domestic dispatches to dealers stood at 51,820 units in the month of March as compared to about 53,000 odd units in the same month of March in 2024. Now, moving to the SUV space, and that is where the growth seems to be coming from. Let's begin with Mahindra & Mahindra, which has reported a handsome 18% rise in domestic passenger vehicle sales at 48,048 units in the month of March compared to about 40,631 units in March 2024. And move to Tata Motors, and it said that its passenger vehicle sales in the domestic market rose 3% on a year-on-year basis to 51,872 units in the month of March. Well, in news coming in, Zomato has let go of as many as 500 to 600 customer support associates within a year of hiring them, as per media reports. Now, this comes at a time when the food and grocery delivery firm, now called Eternal, has witnessed slowing growth in its food delivery vertical and losses in its quick commerce arm Blinkit. Now remember, Zomato recently launched Nugget, which is an AI-powered customer support platform for businesses across the world. Now Nugget, the AI platform, is reportedly powering over 15 million support interactions per month for Zomato, Blinkit as well as Hyperpure. Now, the company has been leveraging artificial intelligence to automate its customer support functions in a bid to keep its costs low. Now, remember, Zomato had hired as many as 1,500 employees under its ZAP or Zomato Associate Accelerator program just 1 year ago in customer support roles, offering them a chance to be elevated to roles across sales, operations, program management, support, supply chain, and category teams within a year. But a bulk of these contractual workers did not get renewals at the end of their tenures. The laid-off staffers are reportedly being offered a month's salary as compensation and have been terminated without any notice period, citing reasons such as poor performance and poor punctuality. So the question that we leave this morning is that could this be the first real big instance of agentic AI eating up human jobs? Well, we don't know that for sure, but with Nugget in action, it definitely does seem so. And moving on to another quick commerce player, Swiggy on Tuesday said that it has received what it calls an assessment order with an demand of over 158 crore rupees for the period between April 2021 and March 2022. The order has been issued by Deputy Commissioner of Income Tax, Central Circle 1, Bangalore. It relates to alleged contraventions including cancellation charges paid to merchants disallowed under Section 37 of the Income Tax Act 1961 and interest income on income tax refund not being offered to tax. Swiggy says it believes it has a strong argument against the order and is taking necessary steps to protect its interest through review or appeal. Now, in a regulatory filing, the company also said that it has no major adverse impact on the company's financials or operations. And before we slip into another break, let's look at some of the global headlines in news this morning. Canada and Mexico prepare strategic responses as US President Donald Trump is all set to move forward with proposed tariffs, with close talks between officials to address the situation. Meanwhile, even European Union warns of strong countermeasures against US tariffs as European Commission President Ursula von der Leyen emphasizes Europe's determination to defend its interests while pushing for negotiations with the Trump administration. Tesla sales in France and Sweden dropped for a third consecutive month in March, contributing to the lowest first quarter figures in 4 years as the electric vehicle maker faces increasing competition and challenges in the European market. The Trump administration begins cutting 10,000 health-related jobs across key US agencies, with staff laid off as part of broader plan to reduce federal workforce amid heightened security. US moves closer to imposing nationwide TikTok ban as Trump delays enforcement, raising concerns over national security and the app's future ownership by Chinese parent company ByteDance. ChatGPT maker OpenAI secures $40 billion in new funding led by SoftBank at a $300 billion valuation to boost AI research, expand infrastructure, and develop advanced tools. US judge reacts to Johnson & Johnson's $10 billion settlement proposal for talc-related ovarian cancer lawsuits, making the failure of its bankruptcy approach as the company vows to return to court to defeat meritless claims, it says. Eurozone inflation eases as expected in the month of March, with core inflation dropping to 2.4%, raising expectations for another European Central Bank rate cut on April 17th amid trade war risks. And Elon Musk's SpaceX launches crew for 4 major missions to study space effects on the human body, further solidifying its leadership in space exploration. These stories and more on the other side. You are watching Morning Brief at 9.
for a reason tonight.
Will it change the shape of American foreign policy? Violence has erupted in Manipur once again. How can we pass judgment, sir, before any inquiry that, they were volunteers or militants, sir? Every brand tells a story. And they are the storytellers. The Sutradhars. They present a brand with band, baja and barat to you. They are the Brandwalas.
It's not the fiefdom of politicians. They owe it to the people. Matter is now more about faith of the millions of devotees than just political slugfest. Does that mean that I can't get a job in Chennai, although I may be best suited for that particular job? They have more civic sense, they have more of civility than all these men. My name is Sudha Sadanand. Welcome to the South Indian.
And with Donald Trump's declared Liberation Day upon us, well, let's bring you all the stories this morning from around the world on how countries are dealing with Trump tariffs. Well, all eyes are on tariffs today as Canada Prime Minister Mark Carney emphasized that Canada would be very deliberate in its countermeasures if US President Donald Trump moves forward with his proposed tariffs. He also noted that Canadian officials, including International Trade Minister Dominic LeBlanc, have been in close contact with US Commerce Secretary to manage the situation. Meanwhile, Mexican President Claudia Sheinbaum stated that Mexico does not support the retaliatory eye for an eye approach, but is ready to respond strategically. Listen in.
We are going to be very deliberate in terms of the measures we take to fight for Canada, fight against these unjustified measures by the U.S. administration, but also to protect, to have that minimal impact in Canada. We will not disadvantage Canadian producers and Canadian workers relative to American workers. So there are measures that we can take that at a minimum level the playing field with the United States. And again, it depends on the broader measures they take tomorrow, if indeed they do against Canada. Thank you.
Nosotros no creemos en el ojo por ojo, diente por diente.
We do not believe in an eye for an eye, a tooth for a tooth, because that always leads to a bad situation. Of course, measures are taken because measures are taken on the other side, but the dialogue must continue. It's not about tit for tat, but about what is best for Mexico and how to face this situation.
Me pusiste, te pongo, sino de qué es lo mejor para México y cómo afrontar esta situación.
Well, it's not just Canada and Mexico. Even the European Union is prepared to respond with strong countermeasures if necessary, according to European Commission President Ursula von der Leyen, as tensions rise over US trade tariffs. Remember, the Trump administration's tariffs on imported steel and aluminum were imposed in March, and higher duties on cars are set to take effect on April 3rd. Take a look.
The European Union has a strong plan to retaliate against tariffs imposed and set to be imposed by Donald Trump. That's according to EU Executive Chief Ursula von der Leyen on Tuesday, although she said the bloc would prefer to negotiate a solution. The Trump administration put in place tariffs on imported steel and aluminum in March, and higher duties on cars will take effect on Thursday. Trump will also set out plans for reciprocal tariffs on Wednesday. EU Executive Chief Ursula von der Leyen.
Europe did not start this confrontation. We think it is wrong. But my message to you today is that we have everything we need to protect our people and our prosperity. We have the largest single market in the world. We have the strength to negotiate. We have the power to push back.
Von der Leyen also said she understood the US wanted to reindustrialise, as does the EU. However, she said US tariffs were taxes on its consumers. She argued that would fuel inflation and make American factories pay more for components, costing jobs. Von der Leyen added that the EU should diversify its trade and remove internal barriers to cross-border business in its single market.
All right, let's shift focus to Tesla now. Tesla sales in Europe, in the countries of France and Sweden, declined year on year for the third consecutive month in March, leading to the lowest first quarter sales figure in both countries since 2021. Tesla CEO Elon Musk is a close ally of US President Donald Trump, and his support of far-right parties in Europe also appears to be hurting sales in these regions. Take a look.
Tesla's struggles in Europe continued in March. Data showed Tuesday's sales in France and Sweden fell year on year for a third consecutive month. It contributed to the electric vehicle giant's lowest first quarter sales in the two countries in 4 years. Analysts expect data from France, Sweden and other key European markets on Tuesday to provide important indicators. They think it could demonstrate consumer sentiment towards Tesla and hint at the group's global first quarter delivery numbers, which are expected on Wednesday. For March, Tesla registered 3,157 car sales in France, down close to 37% on the year. It scored 911 in Sweden, also down around 64%. Tesla currently faces challenges in Europe. The EV maker has a smaller ageing lineup, while traditional rivals and new Chinese entrants launch fresh, often cheaper electric models. CEO Elon Musk is a close ally of US President Donald Trump, and his support for parties in Europe also appears to have hurt sales in the region. Tesla cars have become targets for vandalism across several countries, while Tesla takedown protests are planned across Europe and the US.
Well, the Trump administration has begun implementing its plan to cut 10,000 health-related jobs with staff from key U.S. health agencies, including the Centers for Disease Control and Prevention, Food and Drug Administration, and National Institutes of Health. Among those affected, according to sources, well, employees were seen lining up on April 1st outside the Department of Health and Human Services building in Washington, D.C. The layoffs are part of a broader initiative led by President Trump and top Trump advisor Elon Musk to reduce staffing across federal departments. Some employees were reportedly given tickets and told to return home, while others were notified by email that their terminations were unrelated to performance and that they would be placed on administrative leave. Well, the US is just days away from potentially imposing a nationwide ban on TikTok unless the app's Chinese parent company ByteDance can find a US-based owner. President Donald Trump has already granted a 75-day delay in enforcing the law, while the US, UK and several EU bodies have already restricted the app from government devices. The future of TikTok hangs in balance for its millions of American users. Take a look.
The US is days away from imposing a countrywide ban on TikTok. That's if a deal can't be reached with the app's Chinese parent ByteDance to find a US-based owner. So, what's next for this app used by millions of Americans? TikTok briefly went dark in January before the law requiring ByteDance to divest or be banned came into effect. The bill was passed due to concerns over national security. US Republican Mike Gallagher said ByteDance, quote, does the bidding of the Chinese Communist Party.
This bill therefore forces TikTok to break up with the Chinese Communist Party.
However, President Donald Trump delayed this law's enforcement by 75 days, and millions of users were able to download and update the app again. Trump's considered extending the delay again, but he said he believes a buyer will be found before the deadline.
We have a lot of interest in TikTok. And China is going to play a role. And so hopefully China will approve of the deal. But they're going to play a role.
TikTok, in response to security concerns, has denied that it has or ever would share US data. And the app has stayed online for Americans since its brief blackout. Despite the initial ban, US lawmakers on both sides have said that ByteDance should have more time to divest the app. But social media expert Drew Benvey said there still may be issues if a deal is reached.
there are concerns about not just the data privacy, but about what people see using TikTok. And according to reports, TikTok will still own the algorithm, and that's mixing up what people see. So the content and the influence of content on US users and global users potentially will still be owned by TikTok. And that raises different concerns.
TikTok is only of espionage value when used on the devices of people connected to national security functions. That's according to a 2023 report by Georgia Tech's Internet Governance Project. But other digital experts have pushed back on the report's conclusion. A 2022 report from Forbes magazine found that ByteDance had used the TikTok app to track multiple journalists to discover the source of leaks. TikTok has said, quote, "These bans are misguided and do nothing to further privacy or security." The US, Britain and several European Union bodies have already imposed bans solely on government devices. But other countries, including India, Nepal, Iran, Afghanistan and Somalia, have outright banned it, as well as Taiwan. Experts say other countries with close security relations to the US could now follow its lead.
All right, and staying with technology companies, ChatGPT maker OpenAI announced that it plans to raise $40 billion in a new funding round led by SoftBank Group to boost its continued advancements in AI. The funding round values the company at $300 billion. According to OpenAI, the newly raised funds will be directed towards accelerating AI research, expanding computational infrastructure, and enhancing its AI tools. More details in this report.
OpenAI says it will raise $40 billion in new funding to help drive research. The ChatGPT maker said Monday the new fundraising round would be led by SoftBank. A Reuters source said the giant Japanese tech investor would provide 75% of the money, with the rest coming from Microsoft and other investment groups. The deal values OpenAI at $300 billion. That's nearly double the price tag put on the outfit in a funding round late last year. OpenAI says it will use the new funds to drive research and develop powerful new tools. It's partnering with SoftBank and Oracle to develop a network of data centers under the $500 billion Stargate project. That's aimed at powering AI services in the US. A Reuters source says OpenAI must complete its transition to a for-profit company by the end of the year to secure the full amount of funding from SoftBank. It was originally established as a non-profit organization, but says that has to change given its need to raise huge amounts of money from investors. The latest fundraising makes it among the most valuable private companies worldwide, alongside the likes of Elon Musk's SpaceX, and China's ByteDance, the owner of TikTok.
A US bankruptcy judge rejected Johnson & Johnson's $10 billion proposal aimed at settling tens of thousands of lawsuits that claim the company's baby powder and other talc products caused ovarian cancer. This marks the third time that J&J's bankruptcy approach has been struck down in court. In response, the company stated it would return to court to fight what it called meritless claims. Take a look.
A US judge has rejected Johnson & Johnson's $10 billion bid to settle lawsuits claiming its talc products caused ovarian cancer. The firm has been attempting to resolve thousands of cases by placing a subsidiary into bankruptcy. Now the latest ruling came Monday in a Houston court. Judge Christopher Lopez said the bankruptcy move did not have sufficient support from women who claim J&J products caused cancer. He said it also went too far in releasing legal claims against other entities, such as retailers who sold the firm's products. J&J says cancer patients would have received up to $150,000 each as part of the settlement, but opponents of the plan say it's a bad faith move to dodge full accountability. Now the company says it won't appeal the new ruling, but nor will it settle the cases. In a statement, J&J said it would return to court to defeat what it called meritless claims. The firm faces lawsuits from over 60,000 people claiming that its baby powder and other talc products contained asbestos and caused cancer. J&J, which started selling baby powder back in 1894, has rejected all such allegations as false. However, it stopped using talc in such products in 2020, switching to cornstarch instead.
And moving on, Eurozone inflation eased as expected in the month of March, with a key measure of core price pressures also showing a decline, adding to widespread expectations for another interest rate cut by the European Central Bank later this month. The ECB has already reduced interest rates 6 times since June last year, and investors are anticipating another move on April 17th. Take a look.
Investor predictions for another European Central Bank rate cut grew on Tuesday. Data showed Eurozone inflation eased as expected last month. Consumer price growth in the bloc fell to 2.2% in March from February's 2.3%. A big drop in energy costs and slowing service inflation helped drive the fall. The closely watched core figures, which excludes volatile food and fuel prices, also dropped to 2.4% from 2.6%. That was a likely relief for the ECB, as it's long worried about stubborn underlying price growth. The central bank has cut interest rates 6 times since last June, and investors largely predict another move on April 17th. That as the economy remains stagnant, energy prices have retreated, and the euro has surged. The looming trade war with the US also poses a threat to the Eurozone economy. Tariffs and retaliatory measures could slow growth and push up prices. ECB President Christine Lagarde has warned a trade war could take off 0.5 percentage point from the bloc's economic growth. It would be a big hit, given last year's overall expansion was just 0.9%.
Well, that's all we have for you on this edition of Morning Brief at 9, but we leave you with News 9's 90-word edit, and the edit this morning is on how India's friendship with the US, or more specifically, Prime Minister Narendra Modi's friendship with US President Donald Trump, should result in better economics for both the nations. Do read this 90-word edit and join the conversation on News 9's Twitter and LinkedIn pages. Until then, thank you for watching. News continues right here on News 9.
Light, camera, and action. Kick back, relax, grab your favorite snack because News 9 is here with your weekend dose of entertainment. It's time to take a deeper dive into the buzzworthy happenings of the entertainment world. From celebrity gossips to exclusive conversations, from nostalgic moments to News 9's pick of the week. Don't worry, we've got you covered here. And I hope you've grabbed your popcorn by now because News 9's page 3 is here to serve you everything that we call entertainment.